Welcome back to Capital Gains. We'd love to explore the wild world where business, finance, and politics all kind of come crashing together. And today, we're going to be diving deep into cryptocurrency. Bitcoin hit a record high of $108,300 in December of 2024, more than double its value from the beginning of the year. But as of early 2025, it's trading below $100,000. So what's going on?
Well, it's really fascinating to watch how these events send ripples throughout the entire financial world. I mean, look at Bitcoin, this incredible surge in 2024, that record high in December, more than double.
Yeah, it's a wild ride for sure. What do you think fueled that growth? I mean, was it just hype or was there something more substantial at play?
I think there are a few key factors we have to look at. The U.S. approval of Bitcoin ETFs was a big one.
ETFs?
Yeah, or exchange-traded funds. They make investing in Bitcoin much easier for everyday investors.
Okay.
It's like buying a share of a company. But instead, you're buying a share of Bitcoin. And this opened the floodgates for a wave of new investors.
Okay, so easier access for the average investor. That makes sense. But did the political landscape play a role as well?
Absolutely. We had a more crypto-friendly political climate with all these rumors of potential policy changes. And that definitely contributed to the surge. And we can't forget the influence of big institutions, too. Hedge funds, asset managers, they started pouring money into crypto. And I think that signaled to a lot of people that this was a legitimate asset class.
It's like everybody was kind of watching and waiting for someone to make the first move.
Exactly. Perception is everything in the market. And even the slightest hint of government support can send investors flocking.
That's so interesting. And it makes me think about Donald Trump's return to the White House.
Yeah.
It sent shockwaves through the crypto world. What are some of the potential policy changes that have people so excited?
Well, there's a lot of talk about executive orders to create a national Bitcoin reserve, which would be a huge endorsement
of cryptocurrency.
Yeah. There are also whispers about easier access to banking for crypto companies, potentially allowing them to operate more freely within the traditional financial system.
So that could really be a game changer, open up all sorts of opportunities.
Yeah.
But I imagine some people are a little bit concerned about what increased government involvement will mean.
Of course, it's a very delicate balance. Government support could lead to wider adoption and stability, but it also raises concerns about potential overreach, manipulation, and the stifling of innovation.
Right. It's like everyone's trying to figure out what a Trump presidency means for crypto. And I think this is really where, our capital gains focus really shines through, trying to understand these power dynamics and potential policy shifts. It's crucial for anyone who wants to kind of navigate this space.
Exactly. It's not just about technology. It's about understanding how political decisions can have a direct impact on your investments. It's high stakes, and the rules are constantly changing.
And speaking of changing rules, let's talk about the global regulatory landscape. It seems like every country is trying to figure out how to deal with this crypto phenomenon.
Yeah.
So what are some of the most significant developments that you've seen?
Well, Europe's MiCA regulation came into effect in December 2024. That's a major milestone. It's a whole comprehensive set of rules aimed at bringing more transparency and stability to the crypto market within the EU.
So more regulations in Europe. What about other parts of the world? Are they taking a similar approach, or is there a lot of variation?
There's definitely a lot of variation. The UK is also tightening its grip on crypto, with new rules on capital requirements and insider trading. Even the OECD, the Organization for Economic Cooperation and Development, is getting involved with guidelines for crypto tax reporting.
Wow. So it sounds like a global crackdown on crypto, but is it really? Or is this just an attempt to bring some order to what's often been called the Wild West of finance?
It's a bit of both. On the one hand, these regulations are aimed at protecting investors and preventing illicit activities. But on the other hand, they could also stifle innovation and limit the potential of this technology. So governments are trying to walk this fine line, trying to figure out how to foster a healthy and sustainable crypto ecosystem.
It's so interesting to see how different countries are approaching this. Some seem to be embracing crypto, while others are more cautious.
Right. It really reflects just how complex and evolving this technology is. There are legitimate concerns about security, volatility, and potential misuse. But there's also this enormous potential for innovation, financial inclusion, and economic growth.
It really is fascinating. It's dynamic. And we've only just scratched the surface. Well, before we move on, I want to touch on something that has everybody talking. The security breaches, with billions of dollars being lost to hackers. Is crypto really as secure as its proponents claim?
Well, security is a major concern in the crypto world. In 2024 alone, we saw a 21% surge in crypto hacks, totaling a staggering $2.2 billion in losses.
Wow, that's a massive amount. What is driving this surge in cyber attacks? Is it just individual hackers looking for a quick buck? Or are there more sophisticated players involved?
It's a mix of both. You have individual hackers, organized crime syndicates, and even nation-states targeting crypto exchanges, DeFi platforms, and individual wallets. North Korea, in particular, was incredibly active, stealing a record-breaking $1.3 billion in crypto.
Nation-states involved in crypto heists. That's a whole other level of complexity and risk. And this is where that geopolitical element really comes into play.
Absolutely. It highlights the importance of understanding the broader context in which cryptocurrency operates. It's not just about code and algorithms. It's about global power dynamics, national interests, and the potential for cyber warfare.
It's a sobering reminder that while crypto offers some really exciting possibilities, it also comes with significant risks.
It does, and it's crucial for investors to be aware of these risks and to take appropriate steps to protect their assets.
Well, we've covered Bitcoin's roller coaster ride, the political shakeup from Trump's return, the global regulatory scramble, and the alarming rise of crypto hacks. What a wild ride it's been. But I'm particularly intrigued by the convergence of artificial intelligence and blockchain. That seems to be where things get really futuristic.
That's where we're headed next. The convergence of AI and blockchain is one of the most exciting and potentially disruptive trends in the crypto space. It has the power to reshape the financial landscape as we know it.
I can't wait to unpack that. Stay tuned as we delve into the mind-blowing world of AI and blockchain in part 2 of our deep dive into the world of cryptocurrency on Capital Gains.
All right, welcome back to Capital Gains. As we continue exploring the cryptocurrency landscape, let's delve into the fusion of artificial intelligence and blockchain, a development that's generating immense excitement and a fair share of apprehension.
Yeah, before we jump into the implications of AI and blockchain, I want to circle back to a point we briefly touched on in the last segment, security. With that alarming surge in crypto hacks, what steps can investors take to safeguard their digital assets?
That's a crucial question, especially considering the increasing sophistication of these cyber attacks. A fundamental step is to understand the technology underpinning cryptocurrencies, knowing the difference between hot wallets, which are connected to the internet, and cold wallets, which offer offline storage, is crucial.
So choosing the right wallet is critical. What other measures can investors take to enhance their security?
Well, due diligence is paramount. When you're selecting cryptocurrency exchanges and platforms, opt for those with a proven track record of security and robust measures like multi-factor authentication. It's kind of like choosing a bank with a strong vault and vigilant security personnel.
Right, that analogy makes perfect sense. So in essence, it's about minimizing risk by making informed choices, much like in traditional finance.
Precisely. Staying informed about emerging threats and vulnerabilities is also key. The crypto space is constantly evolving, and new security challenges arise regularly.
Yeah, it sounds like navigating the security landscape requires constant vigilance and adaptation. But with the potential rewards of crypto, many might consider it a worthwhile effort. Now, let's shift our focus to this groundbreaking convergence of AI and blockchain. What possibilities does this fusion unlock?
Imagine a world where financial systems are truly decentralized, powered by AI that can manage smart contracts, optimize trading strategies, and personalize customer experiences in ways we can barely fathom. That's the promise of this convergence.
It sounds revolutionary. Could you elaborate on the concept of smart contracts and how AI enhances their capabilities?
Sure. Smart contracts are self-executing contracts, written in code and stored on a blockchain. They automate the terms of an agreement, eliminating the need for intermediaries. AI can analyze vast data sets to predict market trends and optimize the execution of these contracts, leading to greater efficiency and transparency.
So AI brings predictive power and automation to the table, streamlining processes and potentially reducing costs. What about personalized financial services? How does AI come into play there?
AI algorithms can analyze an individual's financial history, their risk tolerance, and investment goals to tailor personalized financial advice and investment strategies. Imagine a robo-advisor that can access your financial data, understand your preferences, and recommend investments tailored to your specific needs.
It sounds like a highly customized approach to financial management. However, there are concerns about AI's potential impact on the job market. Could this technology displace human financial advisors and other professionals?
It's a valid concern. As AI systems become more sophisticated, they can undoubtedly automate certain tasks currently performed by humans. However, I believe this will lead to a shift in roles rather than outright replacement. Human expertise will be needed to oversee AI systems, interpret their output, and provide a human touch in areas requiring emotional intelligence and complex decision-making.
So a collaborative approach, where AI augments human capabilities rather than replacing them entirely. That's a reassuring perspective. Now let's turn our attention to another aspect of the crypto landscape, decentralized finance, or DeFi. How does DeFi challenge the traditional financial system?
DeFi aims to recreate traditional financial instruments, like lending, borrowing, and trading, on a decentralized blockchain infrastructure. Instead of relying on banks or other intermediaries, these functions are facilitated by smart contracts and governed by the underlying code.
So cutting out the middleman, what are the potential benefits of this approach?
DeFi offers greater transparency, accessibility, and potentially lower costs. It could empower individuals in regions with limited access to traditional banking services. Someone in a remote village could access loans or participate in global financial markets without needing a bank account.
That's a powerful example of how DeFi could promote financial inclusion and empower individuals. However, there are also risks associated with this nascent sector, right?
Absolutely. DeFi is still in its early stages, and the regulatory landscape is evolving rapidly. The lack of clear regulations and the complexity of the technology create opportunities for scams, hacks, and market manipulation.
So it's a high-risk, high-reward scenario. Investors need to proceed with caution, just as they would with any emerging market. But the potential for disruption is undeniable.
Indeed. DeFi has the potential to revolutionize how we think about finance, much like the early days of the internet transformed communication and commerce.
Speaking of revolution, the return of Donald Trump to the White House has sparked a wave of speculation about its impact on the crypto world. Let's delve into the potential policy changes that could reshape this industry.
President Trump's stance on crypto has been somewhat ambiguous in the past. He's expressed both support and skepticism. However, recent rumors suggest a more proactive approach during his second term.
What specific policies are being discussed, and what could their impacts be on different sectors of the crypto market?
One of the most talked about proposals is the establishment of a national Bitcoin reserve. If implemented, this would signal a significant endorsement of Bitcoin as a legitimate asset class and could potentially drive its price higher. However, it also raises concerns about government control over the cryptocurrency market.
It's a double-edged sword. It could legitimize Bitcoin in the eyes of traditional investors, but it also introduces the possibility of political influence and manipulation.
Exactly. Another potential policy shift involves easing banking access for crypto companies. This could be a game changer for the industry, enabling easier integration with the traditional financial system. However, it could also lead to stricter regulatory oversight and potentially limit the decentralized nature of cryptocurrencies.
So greater access to banking could come at the cost of increased regulation. It's a trade-off that the crypto industry will have to carefully consider.
Another area where we might see policy changes is in the realm of stablecoins. Stablecoins are cryptocurrencies pegged to the value of a stable asset like the US dollar, aiming to reduce volatility. The government might introduce stricter regulations to ensure their stability and prevent potential systemic risks.
It makes sense that stablecoins would attract regulatory attention, given their potential impact on the financial system. Are there any other specific areas of the crypto market that could be affected by Trump's policies?
Privacy coins, which prioritize anonymity and user privacy, are another area of interest. Trump's administration might take a tougher stance on these coins, citing concerns about illicit activities such as money laundering and tax evasion.
So while some segments of the crypto market might benefit from a Trump presidency, others could face greater scrutiny and regulation.
It's a complex and nuanced landscape with potential winners and losers depending on the specific policies implemented.
It seems like the crypto world is holding its breath, waiting to see how these potential policy shifts will play out.
Indeed, the stakes are high, and the future of this industry could hinge on the decisions made in the halls of power.
It's a reminder that in the world of cryptocurrency, business, finance, and politics are inextricably intertwined.
It's a fascinating and dynamic interplay of forces